What is going on YouTube? Metals go boom. This video is not going to be like other videos on YouTube that are super bullish on metals. I'm going to break it down for you on the real so you guys understand what's happening in this space, okay? Long term, I have some bullishness on metals. Short term, guys, near term, it looks pretty dirty, and I'm going to explain to you why, okay? We're going to use the charts and go over this. Guys, by the way, it's Brendan from Market Makers, and if you didn't watch my Bitcoin and equities video I released just before this, definitely hit that video as well. Please do like and subscribe. Join button for our Discord trading room right underneath this video. The Telegram for trade signals and our exchanges are all in the video description. Let's get into this, guys. DXY up here at 107 spot 063. Why is this important? You hear people saying the DXY is near a 20-year high. What are they referring to? The dot-com crash. As equities came down, inflows into the US dollar went in, the US dollar soared up to 121, okay? We're at 107. As you guys know, I believe we're going back up to match that high, going back up to 120. We've been nothing but bullish, and keep in mind, Bitcoin, NASDAQ, Russell, all made their peak here in November, okay? They all made their all-time high, and what has the DXY done since then? Up, up, and away, okay, as they all have declined. On top of that, inflation around the world. Why do we have it around the world? Because the other central banks essentially copy the Fed. Now, what the Fed did, they printed 41% of the money supply currently in circulation. I got that update from the economist Steve Hanke, the head of Johns Hopkins. 41% since February 2020 to now. Previously, I said 25%, outdated figure. 41% of all money in circulation. That produced massive inflation in this country. Central banks around the world have had negative or 0% interest rates. They all have to raise now. Quantitative tightening around the world. Declining markets are just beginning. And what's happening? The dollar is gaining strength. It is getting inflows from outside the U.S. It is getting inflows from in the U.S. So even though it is fiat trash, it is gaining strength. And as long as that keeps happening, metals are going to have a hard time succeeding against a strong U.S. dollar. Okay? The markets believe the Fed. The markets are already pricing in future rate hikes in 2023, or future rate cuts, I should say, in 2023. They believe the Fed will get inflation under control. Now, gold, silver being inflation hedges, that doesn't bode well for them. The U.S. dollar gaining all this strength with 40-year high inflation, that doesn't bode well for the metals. So let's look at the support resistance levels and talk about what's really happening here in the metals. Guys, we got to go out to the weekly here, okay? So the weekly time frame here on the metals. This gives you the broader picture view. And this is a lot of time period here. You can see this. This is the March up, right? You have the March up here. You just have the great financial crisis. Gold comes up, makes a distribution box here in Wyckoff, as you can see. Could go ahead and mark this off for you. It looks something like this. Makes a distribution box, falls back down out of Wyckoff, goes back into accumulation for years. Years. Remember, this is 0% interest rates, essentially free money, okay? Gold's not going to do well here. Gold is just accumulating, going up and down above the 200, 233, as you can see, and it starts to break out in 2019. You see this? Starts moving up in 2019. Let's go ahead and get rid of these lines. Let me bring this over to current time frame, guys. This is the problem you have. So we have Wyckoff accumulation that occurred. We have markup that occurred. You are now in distribution. You could flip this to reaccumulation, but that has steps. You guys have heard me go over these steps many times. You got to exit your Wyckoff trading range. That's where you get your cut pattern and propel upwards. And price action is not showing that type of movement and giving the backdrop, the economic backdrop that I just shared with you guys, very difficult to do, okay? Let's start looking at our fib layout here on the weekly time frame. So let's go over the Wyckoff steps. We had our buying climax candle. We had our automatic reaction. We have volatility in the range. We came up here, basically an up thrust, didn't exit the range and started falling apart. The dollar is soaring. Gold is dropping, coming back down to test its range. You got to hold this, guys. If you test this range and come back up, great. But if you lose the 1 fib at 1672, right now, gold is trading at 1740, spot 515. If you lose 1672, you have a bias to come down to the golden ratio phi, which is at 1425. So again, I know a lot of people on YouTube, especially people that view themselves as contrarians, that do believe we are trading in a bubble. They are bullish on gold and silver. Guys, it's not the time to be bullish yet on gold and silver. And also, I need to share something with you about what these assets do when we do have crashes. It's not what you think, okay? Despite what you might hear, it is not what you think. But hold 1672 or else you could be facing 1425. When I'm talking about this, let's go back to 2009. 2008, 2009, okay? Let's look at this. I want you guys to see this. So what gold did here, having some struggles are real. There we go. What gold did here was decline, okay? Here's your actual crisis from the crash. You see this? Initially it declined before it rose. So just be aware of this. Everything crashes in the crashes, okay? This was a 34% roughly. Trading viewers want to cooperate. 34% even. 34% decline with the financial crisis. You see that? And then it went up, okay? Now, if you look at this as well, over here for the pandemic crash, let's go to, zoom in some. Go to March 2020. March 2020, you see this? Let's go find it first. March, right here. That sharp spike up and down. This will be easier if I expand this some. All right, so here we go. March 2020. You see that peak down to that trough. So let's go ahead and measure that. 34% decline in the great financial crisis. And then what do we have here? A 15% decline. Now, keep in mind, the markets went down double that, right? Double or more. But gold will still decline, as will silver, okay? In market crashes, they fall. They just don't fall as much. Why do they fall? Part of that's liquidity. You have big players, whales, large operators. They have to sell what they can sell, you know, for margin calls, things like that. They need the liquidity. So you will see this, and you also see panic selling. So just be aware, we haven't had the big crash yet in the equity space, and when we do, you're going to see gold and silver also capitulate, but then you will see them rise just like they did in the previous crashes, okay? So right now, I'm not bullish on gold at all. You need to hold this 1672. If you don't hold it, you're coming down to 1425. And again, not financial advice. This is all education and entertainment. I would like to see us hold this area if we do come there. Even better if you can just kiss your 200, 233, bounce up and stay in this area, okay? But I do believe we have at least one more leg down in the equities, basically a leg matching what we've already done. So you'd be looking at about 40%, minus 40% on the S&P, minus roughly, 66% on the NASDAQ, at least one more leg, and possibly two more legs. These things always have the ability to spiral into a financial crisis. There's a lot of moving parts, a lot of variables. Will the Fed pivot? Will they stop cutting rates? Will they raise rates too much and really cause a crash? Lots of unknowns. That's why we got to track this and be very well aware of our environment we are trading in, okay? Let's go ahead and go forward here on gold on the daily. You can just see us working our way down through the GAN fans. Again, low volume, right? Looking at the low volume, bearish on the money flow, almost oversold on the money flow, might hold this range and then might start legging down some more. Looking at the weekly, doesn't look very promising. Gold on the 4-hour time frame using a tighter wave projection, dancing along the 1618 at 1738. Again, you can see the GAN levels in between here, but that 2618 is at 1664. Okay, you're at 1738. This would put you right at that 1672 on the weekly. You'll lose that, guys. That's where you really start to capitulate in gold. Very important to hold this. May be difficult to do, especially if the dollar continues to gain strength and people are losing interest in gold. Some of that is because interest was in crypto, still is in crypto, but to a lesser degree. Look at silver, guys. Let's go ahead and do this on the weekly as well. Silver, Wyckoff distribution. Again, I have my trend-based fib that I laid out for you guys using this buying climax candle, automatic reaction, up here to the up thrust, right? So our swing high, swing low, swing high. And you can see the projection here. And guys, you can see the movements in Wyckoff, right? We talk about this, again, all the time, right? But buying climax, so you have your ceiling, your base, you have an up thrust, you have volatility, you make a double top, you decline, you make another double top. You see that? You find support here, you get a pump back up, you come back and back test that fib at 27. And remember, we always talk about the breakout, making that cup type pattern near the top or on top of the Wyckoff range and then launching up. Same thing in reverse, the inverse cup, okay? You got your down thrust, you come back up, you roll over, you made your inverse cup. And guys, silver looks like it's moving towards the 1618 at 16 spot 875. Disappointing to a lot of people, I know. I have family that owns silver. I own silver. But this looks like this is where it's coming down to, 16 spot 875. Need to hold that. If you don't hold that, I mean, that would be catastrophic if you don't hold that. You'd be going into single digits. That would be $8 spot 67. I'm not saying it's going there, but I'm saying you are working your way right now to 16 spot 875. Okay, just keeping it real with you guys. When these market crashes do come to fruition, these assets also sell off. Let's just look at silver since we are on the weekly. What did we do here in March 2020? Look at this. It's right in front of us. So we can look at March 2020 here on the weekly time frame. Let's get a measurement. Take this price range. We'll be generous and go from this immediate swing high here, okay? Again, you went down 38.56%. So gold went down 34, silver went down 38. This is when everybody thought the world was ending. And trust me, that's how these crashes appear. Everybody is deathly afraid. As a matter of fact, Mark Mobius, billionaire investor, he said that he was asked the question, how do you know we're still in a bear market? Or we're still in a bear market. And he said, because people still have hope. You will exit the bear market when nobody has hope. Nobody had hope. Nobody had hope in the great financial crisis. This is when you will know that you are at a bottom, okay? So we are not at a bottom in these marketplaces yet. We will have rallies, but until then, you're seeing silver and gold really struggle, guys. Flipping over to oil, and we'll look at nat gas real quick as well. Here's my oil trade. I told you I posted and shared in my room. We talked about it. I entered at 96. Oil traders are very savvy. Energy traders are very savvy. They do not believe the Fed, okay? They do not believe the Fed. They do think we are trading in a potential recession, hence the energy sell-off, because the economic contraction will come in a recession. So people were dumping positions. We are oversold here. I do think we will range once again between 100 and 115. This seems like it'll be the range. If we flip over to a smaller time frame, you can kind of see here, here's our support structure. Came down and wicked the 1618 at 96.92, and actually we got down to my entry at 96. And what is price doing? There's your cup, right? You see this? So if you went ahead and threw this in Wyckoff, something like this, here on the 4-hour time frame, Wyckoff trading range, down thrust, that could be your springing back up, trying to hold this range, get your cup pattern, looking to see if we can move up from here, okay, and ending somewhere in that 105, the 115 trading range. That may be where we stay for now. We have a lot of reports coming out this month, so we're going to watch that closely. Here on the 4-hour time frame, bullish, okay? Money flow indicator is bullish. We are not overbought yet, so this has room to move up to further resistance. Looking at nat gas, guys, what an ascension and decline on nat gas. Fell below the 200, 233. Right now, you are impacting the 144 on the dollar, and you're struggling, but you've had a lot of people in our room actually bought in here, okay, at the base. You have a nice range here, and you pumped up above this. I do believe energy is oversold in the near term. The conflict is still raging on. It is one piece of bad news away from just having another massive energy spike. We are still in midsummer. July and August are peak travel months as well. So I do think energy will rebound. Will it go to new highs? I don't know. I do think we'll at least get into the mid-range. These will be very profitable trades. And then when that GDP comes out and shows potential recession, got to be very careful because this could easily reverse. Okay, so we've got to be very careful. It's at the end of the month. All right, guys, I hope you enjoyed this commodities video, mixture of ranting and commodities. And please do go ahead and like and subscribe. I'll answer your comments and questions in the YouTube comments. Everybody have a fantastic day. Happy trading.